All right. Well, welcome everyone to Let's Talk Markets with Dave Lauer. I'm your co-host Pink, and we are revisiting our monthly markets discussion with Dennis Dick, George Kailas. Eric was unable to join us today. But we will definitely get him back in the conversation next time. But we got a lot to talk about. A lot has happened since the last time we spoke. Maybe rate cuts are back on the table. Maybe not. I'm not sure. A lot's been going on with GME, so I think we're going to start there. I think everybody tuned into Roaring Kitty's live stream last week and watched the action, we'll say. I think it was Friday went a lot different than a lot of GME holders were expecting, but yeah, a lot to talk about.
That was definitely a thing, that live stream.
Yeah, that it definitely happened.
It happened. It was a thing. Yeah.
Interesting.
I loved the confusion. Just he really played the intro a little bit too long, but like in the best way, because everybody was just kind of like, what does he do? Is this the whole stream? Is he just gonna meme silently the whole time and then sign off? So it's been a long time coming, and it was definitely interesting to see what he had to say after 3 years of silence.
After just memes. I mean, in the surprise of surprises, and I feel like there's been many surprises on this one, a few dilution events that the market responds pretty favorably to, considering that they hurt a short squeeze, and that's what everybody I thought was in it for. And then it responding poorly to his live stream is another one of like the hugest surprises. Like I didn't think it was going to go up forever, but I certainly didn't think the live stream was going to be like the thing that got momentum going the other way.
Yeah. And I mean, I think part of it was that there was an expectation that he might be coming on to exercise that option position, at least partially. And maybe there was some disappointment or surprise when he didn't, and that really nothing came, there was nothing of note, let's say, I mean, other than the reappearance. So yeah, it's been an interesting couple of weeks, hasn't it? I mean, GME is holding solid right now, right around 30, a little under 30 at the moment that we're talking. Like you said, George, that's after a pretty substantial dilution event, a second dilution event, right? That they went through, where they executed, they sold 75 million shares, I think at an average around 28.5 to raise over $2 billion. They got a lot of cash now as a company. Earnings were released after market yesterday. Not great, but not surprising, right? Because they'd already sort of pre-announced, and actually stock rallied after hours yesterday. Holding steady right now. I don't know. It's sort of like, I said this last week. I'm like, how is GME not the most fascinating thing in markets right now? Right? Like just watching it unfold, it's like, who knows what's going to happen next?
I mean, look at the moves for the last month, and I tweeted this earlier, but we started, at $20, and the whole Roaring Kitty thing happened, and we know in 2 days we went to 64. Then 2-3 days later, we came all the way back to 20. Then 2 weeks later, we get more memes, and the stock pops to 40. Then we come all the way back to 25. Then we get news that he's going to do a live, broadcast, and boom, it pops back up to 47. Then the broadcast doesn't go that well, and it goes all the way back down to 22. Now we're back up at 30 here. I mean, it's a contrarian dream, really, here. I mean, if you're fading these big moves in both directions, here's the price. And, maybe long term, it's going higher because they got a lot of cash. I don't know where GME is going long term, but short term, it's just so choppy. Even on that, obviously on the live stream, we watched it go from, it was 34, and then it's 33, 32, because, he's late. Is he going to be a no-show? All those questions are out there. Then he shows up, and it pops to $37. It's like, he's here, and he's, injured, or whatever it is. And then it's like, there's weird, and a lot of it was weird, and they started knocking it back down. So, but then, you start thinking about, like, he's got all these calls. He's got this huge position. Is this the last trick up his sleeve? Probably not. He's probably got another trick up his sleeve for sure. So there's a play there. It's been bouncing off the low 20s multiple times. Did it again 2 days ago. So maybe that continues to be the play until you hear otherwise, that he's either, got out of the position. but it doesn't appear that he's sold any calls. Doesn't appear that he's sold any stock.
Nope.
He's
Open
still
interest
there, and
is
you got to
just climbing.
think that there's something else up his sleeve, and that's what I think too. Like, obviously the person's one of the most influential people on Wall Street. Who knows what he's going to tweet next, meme next, say next? Maybe comes out and holds like a partner with Ryan Cohen. We don't know. So we just know he's got a huge position, and he's moved the stock 3-4 times here over the course of the last month. I wouldn't bet against him here at this point.
All right, Dennis, I got to ask you. Okay, you're a trader. You've been around for a long time.
Yeah.
You're sitting on a position that goes from like 30 million to nearly $600 million. Okay.
Wow.
You're sitting on this position. Now you're down almost 300 million from the peak over the course of like a week, and you're laughing on a live stream.
That's unbelievable. I've never seen somebody lose that much money and just drink a beer and like just kind of enjoy it. It's
unreal, right?
Yeah, it's unreal. It's like the money is just separate from him now. And maybe, and again, the question is, and it's been brought up before, he had 40, 50 million, he's up to $200 million position, went to 600 million. Is it all his money? Is he working with somebody? He says he's not working with anybody. He says that, he's not working with hedge funds. So, maybe it is all his money. Where the money came from still to be answered. But it's, just to be able to take those losses in stride like that. I mean, that's impressive in itself for sure.
I was watching. Yeah. I've been watching this unfold just in total disbelief. I mean, I've experienced losses before of like orders of magnitude difference, and never had that kind of reaction.
I get ticked right off. Here I am
right?
losing 2% on something, and like, man, this is a terrible day. And then I think I tweeted out, I was like, you think you're having a bad day? Just watch this live stream again. Watch somebody losing $300 million. You think, hey, my day wasn't that bad.
I'll clean it up for you two, but I think the saying goes, we can stay ape longer than they can stay solvent. So I think that seems to be partly his attitude. He's a bona fide ape, that's for sure.
Yeah, I think piggybacking on what you were saying in terms of like the money that, you don't quite know where it came from or, who might be involved in it. I think the piggyback on that is like a fair question to ask, and gets asked of any institution when you see, what's reported in the 13Fs or whatever, like, is that all? Just because you're showing one screenshot, like, doesn't mean that you're seeing everything. And like, to me, there's a number of things that don't make sense in this. Like, that loss is one of them. Like, no matter how diamond-handed you are, like, maybe you could lose 300 million a day, but I don't know how you could lose that much and not see it on your face a little bit. Yeah. I don't know who is capable of that. Like, yeah, to your point, like, I've had some days where I've just, I've lost some options or they've like gone down in value. Yep. And even then, like, I'm pretty miserable to be around for like at least until the next morning. Like, and, I'm not like picking at people. I'm just kind of like, loafing around. Like, that's what I do. Like, I don't have the same pep in my step as I normally do. But, there's so many, there's kind of the interesting of this and the confusing. And the one question that I've not gotten a good answer from on anyone is why now? Like, all this time, it started to pop again. Yeah, like, yeah, he had the meme, but like, I think as we've talked about, as I think you shared on your X feed, I'm getting better at saying that instead of Twitter, Dave.
I'll never change.
We kind of saw some big moves in both the short-term and the long-term options markets before that meme, like very clear moves. So it wasn't like whether some people were seeing overall activity increase in the options markets or whatever, and they were just like piling on, there was some knowledge of this event. And when I look at like knowledge of an event and people trading, I've never seen something where at the event you can't say, or like at the price move event, you can't say like, oh, I think it was actually this. I can't point to anything other than the meme, which doesn't explain a bunch of, institutions rising the options pricing in advance. And I think, obviously we see the dilution not really like killing the momentum a few times. That's super weird. But like what I have to say is like, I have seen, so the first run kind of ending, we kind of saw like our upside rating in the long-term options markets drop like 35 points, which I've never seen really anything close to that right at open. So it started along this like thesis of like, yeah, it makes sense if institutions are in it. They don't want to sell their short-term options positions because everybody's watching those. So they seem to be swing trading in the long-term options markets, which I've never seen. So actually, like one of the indications I'm looking, and actually net option sentiment like was on our like 100-point scale bell curve. It was still hovering around like in the high 80s, and then it went close to 100 again before this run. But one of the things that I'm seeing now is I'm actually starting to see net options just like fixating on it. And I think the way like institutions at large are viewing this is like they want the short-term exposure because they have no idea. It's hard to say it won't go up. And it looks like they're hedging in the long-term options markets because we actually saw, upside actually dip below downside for the first time yesterday, which is kind of like downside's looking more at long-term, like put demand, and upside is looking more like a call. So that would be, for someone looking on your own, or, you can check out Prospero.ai and GME. Like that's what I would look for if you're trying to figure out where these swings might come from, because from where I sit, like the short-term options markets just look like they're going to be bullish until people are sure this is going to be over. So I know a lot of retail investors are looking at like, oh, the pain, X amount of options are going to expire on like Y date. But I think if I have one tip in looking at this, I wouldn't read too much into that, because there's certainly evidence of, swing trading in the long-term options markets, hedging in the long-term options markets, because I think the risk reward is just cheaper for that. So I think that's the one tip I have for people that are following this. Obviously, there's some people that are just going to buy and hold and whatever. And, what I'm saying shouldn't affect your strategy very much at all. But if you're looking for, and you typically look in the short-term options markets and things like open interest changes, things like that, that's my one tip. I wouldn't read too far into that typical behavior, because we're seeing very atypical behavior, which is a lot of high volumes swing trading GME in the long-term options markets, which is really behavior I rarely ever see, and certainly nowhere close to the extent we've seen it on this trade in the last, month or so.
So let me ask you guys, he's got this massive options position. He's got, what is it? It's a week and a half till expiration while we're recording this. What is he going to do with those options? I mean, is it obvious like it's going to be some amount of exercising and rolling, or something like that? Or do you guys have any theories on it's a short-term options position now. What's going to happen to it?
I mean, he's got to have the money to exercise them all too, right? So,
Right.
like,
And
where is all that money coming from? Maybe he does.
He could, but
does he have a backer? I'll ask you, do you think he's got a backer? Do you think there's somebody else working with him? I think, he said no to the hedge fund, but he didn't say no backer.
Correct.
Is there somebody else that's backing him here?
I have no idea. I think, like I said to you, but when we were talking earlier, I think that there are three possibilities on how he got this money. The one is that he's been selling covered calls on his core position, and he's, got a good handle on the cycles of the stock. And if you do, then, mathematically it could have added up. Two, he's got a backer that, something that you could plausibly say it's not a hedge fund, but it's something. Or three, he is that talented of a trader that over the last 3 years, he's turned, he's what, 4 or 5x his
4 or 5x. He went all in on NVIDIA.
Right. Yeah. Okay. Maybe. Right, maybe he just bought NVIDIA. But who knows? I have no idea. And let's assume that what we're seeing is all he has to work with. It doesn't have to be all his whole portfolio, but that's what he has to work with on GME. When it peaked during, some of the craziness over the last couple of weeks, he could have cashlessly exercised almost all of those options, if not all of them. Right. And he chose not to. And he obviously knew this. He knows what he's doing, and he chose not to. So that leads me to say, why did he choose not to do that? And therefore, what is the end game over the next week and a half?
It's going to be awesome to watch unfold, and that's what I say too. Is like I'm like in the mid 20s here. It's hard to bet against his stock right now because I think the biggest thing he's going to do is still to come here. He's sitting back and just relaxed, laughing, having a beer as the stock's going down. What's he know? Like, does he know that he's got some trick up his sleeve? Does he know he's working with somebody? Does he know anything? I mean, he came off on the podcast like, I don't know anything. It could go up, it could go down. It's my thesis. And he was kept talking about the long term, like talking about, the long term. But he's got the truth of the fact is he's got some shares, but he has a lot of short term options here. So you can bet on the long term all you want, but those short term options are going to go off the board, here in a week. And you got to figure out, more what's happening in the short term. So I got to think there's going to be something that's going to happen here in the next week. That's going to be like, wow, that's why he's long. But maybe not. Or maybe he's going to roll him up.
If you look at his previous live streams, this one was very different, right? Like he was generally.
I've never watched one before, so enlighten me a little bit.
Let me tell you. No, it honestly, like his past videos, very articulate, very quantitative. He's a CFA, right? And former compliance officer. He knew what he was talking about in his past videos, and he had models for how to do fundamental valuation of companies. That's how he arrived at GameStop, and it overlaid market dynamics and shorting, right? And clearly like identified a hell of an opportunity, amongst others. That was what surprised me the most, is that if his past work is very quantitative and articulate. And no offense intended, it was a really interesting live stream, but it was not what I would call quantitative and articulate, right? No. It was more just having fun. That's awesome. That's great. But like it why, right? Like why the departure? Why putting up that? I don't know if it's a facade, or I don't know if that he was, purposefully presenting it in a certain way.
Yeah, I just keep on coming back to the why. And I think one of the like why now questions, like, okay, if he's in NVIDIA, why was he not talking about that? It's just, and why now? Why back to get, like, if he was investing that whole time, and I do believe he was investing that whole time. That's one thing. That's one of the many things that I don't understand. I mean, I do think there's another price run in here, and I don't expect us to get an answer. Like, this is why. I don't. I think there's going to be another price run, and it's going to be like the same as the rest, where it just like starts going up. And I just can't. The one thing that Dave and I had talked about before that I just kind of come back to is I'm just like, if you're I started as an equity analyst. If you're an equity analyst, like I had at one point, I was like the single family office I was working for was the largest shareholder in some print Yellow Pages companies. And I was getting calls about that all the time. Like, if you're thinking of investing in GME, like, how would you not call Roaring Kitty? Like, you got to call him. He's got to get those calls. So the only question is, like, what happens in those conversations? Because, it's perfectly acceptable to say, like, to exchange ideas, figure out if someone might be buying. So, like, at the very least, I've got to think, there's some of that went on, and that's all reasonable. But the rest of it just doesn't make any sense without there being some kind of connection there, because there's enough people that seemed to know about this. And like, if the knowing about this is Roaring Kitty making that post, because there was really no other reason for all those options to be bought, like really in like the 2 weeks leading up
prior
to that post
prior to the meme.
That's the one thing where I'm just like, I don't want to. It's never good to accuse anyone of anything that you don't have proof for. And to be clear, I've got no proof other than this, just kind of like smoking gun that I'm talking about. And like, to me, there's I don't see how there wasn't at least some shared knowledge between a group of people that put money into this trade about how they were thinking about it. Like, I think that's
imagine
kind of the lowest level.
Just imagine, knowing that information of that meme was going to come out. The thing went from 20 to 60, in 24-hour period. A huge amount of money was made there. Whether the people sold or not, we don't know. We assume that it wasn't Roaring Kitty selling, but we don't know because he wasn't showing his positions back then either. Maybe he made that money being long calls. Maybe he was accumulating 18, 19, 20, put the meme out. Maybe he sold them all at the top of 60, tripled his money, or maybe even more than, because if it wasn't all stock, it was in options, he could have, made 100 million off of that, or, or more.
Yeah.
So, so there's another theory of where the potential money came from. Which brings us back even to the question, like, it's one thing, okay, he shares that information. Is this insider knowledge that he's sharing because the insider knowledge of his meme? I mean, he didn't really do anything besides posting, a tweet out there. I mean, is there anything regulators can, like they say regulators are looking at him here, is there anything they can really charge him with? I mean, he didn't really say go buy the stock. He didn't really say, he just posted a meme and it went up 200%.
Yeah,
I mean,
I can't imagine you can consider that like material non-public in any way, right? Like
no.
there's no way.
But would it be that, if you had the meme and you knew the meme was going to move it and you were a buddy and you traded and you went and loaded up calls ahead knowing he's going to post it, well, that is material to the stock and it is non-public at that time. Can the people along get charged? I mean, it's just so many questions here.
Is that a tip? Is it a tip if he tips someone off and he's like, I'm going to post a meme?
Yeah. Which seems absurd, but when you look at it from a regulator perspective, there was absolutely no doubt. If you knew that meme was going to get posted, the stock's going up. I mean, it is material to that stock, even though it's nothing to do with the company's fundamentals. It is definitely material to the share price. There's so many questions. It's such an interesting case, and I do expect the SEC to look at passing different types of regulation here to maybe cover some of this stuff, because we're in this whole new world where memes move price and there's no laws regarding posting memes.
Right.
Should there be? I don't know. I don't know the answer to that question. I'm just posing it.
I don't know. Like kind of interesting. Sorry, go ahead, Pink.
Yeah. I was going to say, I think it's kind of interesting because when I'm talking to retail investors, the one thing I tell them is I'm just like, you just have to have something else besides saying the stock's going to go up. You just have to, and then you're sharing an investment thesis. Say one thing that you like about it, and then you're not pumping a stock. You're just sharing information, which, that's the thing. It's a Tuesday in the hedge fund industry where people are saying, for XYZ reasons, I like this stock. They're passing it around, or I think momentum's about to increase for XYZ reasons. That's just standard financial stuff. I think you bring up a very good question. I mean, I would love to see some kind of meme. Is a meme a violation of
it's interesting.
Non-public information kind of trial? I would love to see
it'd be hilarious. It would be hilarious.
Anything happened to Roaring Kitty, but it would be, because I do think that retail is a lot more powerful, and this is what I say all the time. If they just start getting in the habit of having a little more than a meme, than a just buy the stock, I think that's when we might see a real retail charge that we kind of talked about last time on the show, where it's just retail has a lot of power now because of social sentiment and because of these things moving around on Reddit. And I just think not only would the discipline of sharing a thesis, I think, help people do better, I also just think this thing gets that much more powerful because you won't have as many, bag holders, losers. If you can clearly say okay, this was why we got it in at the start. This doesn't exist anymore. It would be a good trend to happen. And when I look at, I was in AMC for a long time because I got in a little after GME and I was like, this is next. And I'm still in contact with a lot of people that are kind of in it still. And I'm just that's the one problem. We're just when we first got into this, I had a clear thesis. My thesis was that, I think it got beat up too much during the pandemic and the revenues are going to recover, and it's a short squeeze play. And so, and it's got the name recognition. That's what I like. Similar to GameStop, people had some attachment to AMC. So those were good things, but it kind of in my mind fell apart after revenues, after everything opened again. You gave it time, and that was the big thing that I'm just for me, this doesn't work anymore because that was an important leg beyond just short squeeze and that kind of falling apart because of all the dilution. But like the short squeeze part is hard. Even if people just got accustomed to saying like, there's some other thing that's good about this other than the short squeeze, I think that would be a huge advancement for the Reddit mob in terms of their success rates.
Yeah. All right. Super fascinating. We targeted 10 minutes for this
And we're
conversation.
25.
Yeah,
we
we're
got
well
5
over.
minutes left to talk other markets.
It's all good.
It's basically just a GME. I mean, we could just go the whole 30 if you want. We
You
could talk
could.
about this for hours.
I know.
It's so interesting.
Those are the conversations. It's like the only conversation I'm having.
It's fun.
It's
a
fun.
fun conversation.
Yeah.
Are you guys long it?
Oh yeah. Long.
Oh,
Like
yeah,
I said
dude.
earlier.
Oh, yeah.
I mean,
Long and
I'm
strong.
Princess
I'm not either.
DRS, so you know me. I'm Princess Purple Circle. But you know, when a company is sitting on what 4 or 5 billion in cash, and people are talking mergers and acquisitions, you know.
I mean, they put in a real floor on the share price with all this cash.
Yeah, they did.
Yeah.
That's what I'm just saying. I'm trading. I have no position at this time, but I've been bet trading it off the 20 because it seems to be continuing to bounce off that 20 area. So, I mean, and again, you know, like you said, they got a lot of cash here now, even if they're not doing anything with it. I mean, they got the story behind them. Like what you need, you know, is fundamentals in a story. Well, they got some fundamentals because they got some cash. They ain't going bankrupt anytime soon.
Citron
So, I mean, that's
was right.
something in itself.
Andrew Left was right. It finally went back to $20, like you said. What, 3.5 years ago? He said it was going back to $20. Of course, that was pre-split, but he wasn't
Pre-split.
exactly
Yeah.
wrong.
So, Pink, what do you think they're going to do with all that cash?
I mean, buy Steam. That'd be cool. We were talking about that just before we came on. You know, all of the different possibilities of what do you even do with that much money? Even if GameStop is profitable, just buy a profitable company, and then your books are good. So
there's got to be an AI story coming here, don't you think? Like
absolutely,
everything's AI. This market's AI. Wouldn't that be the thing to really get it going? That GameStop comes out and somehow is an AI play all of a sudden. That would get going.
Have they registered GME.ai? Someone should
working with NVIDIA. They're working with NVIDIA on whatever. All you have to do, we see no name stocks mention that they're working with NVIDIA and they're getting huge pops. GameStop, NVIDIA, you know, like there you go. I got the next story for you. Starting rumors here right on Dave Lauer's podcast.
GameStop can't buy Steam. Steam did 10 billion in revenue in 2022. I can't buy 20, but like that 5 billion isn't covering that. And Valve, I think they're like which the company that owns it did 13 billion. So I don't think that cash. It's going to have another run if they're going to be able to have enough to buy that.
Gabe Newell's too cool. Anyway, he would never. He likes being the cool guy on the block. And I think it would be a coolness competition between him and RC. You know, you mentioned something though, George, and it made me think like people talking about these mergers and acquisitions. Well, that's billions of dollars, and that's awesome that, you know, we have about a 10-year runway for GME. That's not even in the realm of most M&A discussions. It's kind of like that scene in The Big Short where the little guys are like, we've got 40 million, and they go try to play at the big boys table and they get laughed off, like, come back when you have $1 billion. You know, that's kind of, it was giving that. So who knows?
Yeah. It's kind of hard when you have Apple sitting on the pile of cash that they are to be like, we're going to compete with a company like that in M&A. Like 5 billion is a nice, you know, it's a nice little bit to keep you alive, but it's hard to get into that M&A space, especially if like you're using a lot of the cash that you would use to like grow the business to acquire the company. Like, you know, why, you know, why Instagram sold to Meta or whatever, too many different names there. You know, I think it was $1 billion, but they wanted that because Meta had so much resources to blow them up that much further. And so like, I really think even if you're talking about like a $1 billion acquisition for GameStop, the company that was getting acquired would probably want them to have, you know, at least 10x the cash that they have now to say like, oh, it would really help us to get acquired, which is not off the table, but I don't think that pile of cash is really good enough to make a difference in the M&A space. They need to figure out how to put it into their business and grow their core business. And then that's when we're talking about like having a thesis. I might consider investing on a short squeeze, like business growth thesis, if they figure out a real growth channel that I don't see yet.
And just to put some context around that, I guess I hope this is right, but I'm looking at Apple's balance sheet and I see 67 billion in total cash and short-term investments. So yeah, just some context, right? I guess the other thought is that, you know, he wants to turn it into like a latter-day Berkshire Hathaway. But again,
they
start
have given him
investing
free reign to invest how he sees fit. So,
Right.
you know, that's not completely off the table.
I buy that more than the M&A thing for sure.
Yeah. Okay. All right. Fascinating. Like we said, we could probably keep going, and we will, because there will be way more to talk about. Maybe we'll come back on in a couple of weeks instead of our, you know, attempted monthly cadence to talk more about this. You know, let's because man, next week, right? Next week,
Still
those
has to
options come due.
exercise.
Yeah. All right.
Oh, it's gonna be a fun week for the stock. I can't see betting against it right now, though. Like people who are betting against it here at this point. I mean, it's popping right now. Even as we talk, we started the show as 29 now. It's 31 now.
Yeah, it's moving.
It's the roaring kitty effect. We need it behind you, Dave. We need the chart behind you.
I'm seeing someone is looking at some August call activity that seems to be interesting. So the same place that I learned about the June 20s before anyone was really talking about them is now talking about some August calls, some activity in those where the open interest isn't quite there yet, but it's interesting. So maybe there's some rolling starting. Okay.
What's the event though? Again, what's happening in August? What's happening next week? Like
a lot of people just like the stock, I guess.
I heard you didn't say that in the live stream.
I was surprised you didn't say that.
I couldn't believe it. It's like the Bart meme, like say the thing, and he didn't even say the thing, you know?
Yeah, exactly. All right. We got some macro stuff to talk about. Let's really quick get to this.
Merch. That's my idea for them. They should sell merch. Merch would kill it. But
they do sell merch though. Oh, but maybe like our Roaring Kitty GME merch. Yeah. That's a whole new fashion line. All right, folks, you heard it here first from George. GameStop in all of its retail locations.
I'd buy a Roaring Kitty.
Will broaden out to both video games and high fashion. Roaring Kitty branded.
Just sell the headbands. Come on, you'll make a killing. Just selling the headbands.
I'd look awesome in the pre-market prep with a Roaring Kitty headband. I'd look great. Help this hair. This hair is crazy.
All right, I'm glad to see someone does as much with their hair as I do. Okay, now. Today, it is June 12th. We'll get this out soon because this is a good conversation. But we got an inflation print, and it was a pretty big move in markets after the inflation print. It's a pretty encouraging inflation print. So it's the lowest core inflation reading since April 2021. What do we saw that inflation is flat. CPI flat month on month, which is a big change. And what did we saw 0.2 versus 0.3, was it? On core, 0.2% on core versus 0.3 estimated. Core year on year is 3.4 versus the previous 3.6. So inflation is coming in, continues to come in. We continue to see disinflation. The labor report last week was pretty good on wage growth. So we continue to see wage growth significantly outpace inflation. The markets are super happy right now. SPY's up over 1.2%, Q's about 1.5%. So the market likes it, and the CME Fed Watch is showing a pretty big move for the probability of interest rate cuts. So what I'm seeing on FedWatch is that a July cut is on the table, though unlikely, at 14.5%. The September cut, it says 80.5%. So almost the markets think a September cut is now definitely happening, and markets think 2 cuts by December is 97%. Actually, a little down from earlier, it was 99%, but still pretty high. So markets think this is a big deal. What do you guys think?
I mean, Canada went last week. Europe,
cut.
Yeah. So you're starting to see other economies doing it here now, and other So I've got to think that, yeah, they're probably going to be coming here. And, and just looking at the markets here, I mean, I always go to the TLT lie detector test. What are the bonds doing? And they're up 1.64% too. It's a huge move for bonds here today. So they're pricing in the same thing. IWM obviously really feeling, a big push higher here because all the small caps that they need lower rates. I mean, Apple doesn't need lower rates, but IWM and all the stocks that are in there, they need lower rates here. So you see a light data point, it gets you thinking that, hey, maybe this is the time. Maybe this is finally the catch-up trade with the small caps going to start to catch up. And I thought that this morning, because Apple was actually trading red on this number, then Apple blasts off 4% more, and I'm like, okay, well, everything just goes. It was the everything buy market here this morning. I think just interest rate cuts are probably coming here later this year. I probably agree with that. Inflation has ticked low enough where we can start, not worrying about it like they were. And I think you're going to start to see the Fed start to talk that way.
Yeah, I think, to me, going a few weeks back, I think there was a GDP number that basically was right on target, and the market reacted a little poorly to that. And then a few days later, I forget what it was. It was like a Friday. There was another number that was right on target, and then it actually started out well and shot in the other direction. And I was just seeing a very tight market, even to just hitting the numbers. But I think even the day before, we were actually seeing QQQ net option sentiment. We tend to say is below 30 is bearish and above 40 is bullish. And it was actually kind of mid to high 30s. And the day before the announcement of the rate cut, we actually saw that shoot up to, over 50, which is highly bullish. Hadn't seen that in a while. And I think, what we kind of saw some people, what we like to say is, I think some people might have known that was coming the day before.
Usually seems like it, doesn't it?
Yeah. But basically, since then, I think we've seen a lot more certainty that the rate cuts, obviously today, even more. And I think, we started to see a lot more bullishness, but there was some hesitation. There was a little, and then I think the hesitation was today. They're just like, okay, let's just make sure the kind of hotter inflation numbers that we saw, a few times early in the year, those are gone. And then I think when people saw that today, they were just like, okay, we're definitely getting a rate cut. It's only a matter of time. So I think that unless something changes, we should see a pretty strong market into the election, I think.
Yeah, I think that's right. I think, and I think this is really one of the first, if you really dig into these numbers, it's one of the first really encouraging prints for the Fed. It really looks like exactly what they want to see. And I think the meeting today, I mean, this will probably air this, after that. So we're just speculating. I think he's going to come out and he's going to really be a bit more dovish than we've seen before. I think he's going to hopefully say, this is what we want to be seeing. Let's keep it going. Obviously, they're going to hold rates steady. I mean, a cut would be a total shock to markets. I think he should, for whatever it's worth. I think just cut him already. I don't understand why he's still waiting, but whatever, that's Powell's going to do what Powell's going to do. But, I think we're going to see something in the presser that comes out of this meeting that markets are really going to like. So I'm with you guys. I think we're rallying for a while now. I think the markets love to see this, and that's great. I think it's good for markets. It's good for the economy that CPI has finally really started to moderate. Wage growth is there. People are still hurting. Food is still really ridiculously expensive. But these things take time to work their way through.
Do we play the IWM and the smaller stocks and the small caps for the catch-up trade if we think interest rate cuts are coming here? Or do we just stay with what's working? Because that's apparently working here too, just as I'm looking today. Apple trading up 4% more. Microsoft up significantly. NVIDIA, which is now post-split. I kind of thought maybe we'd see a little bit of post-split weakness. That has not happened. The stock just continues to go higher here, up another 4%. I'm still long, but I'm like, holy, it just seems like it's the just one directional trade here. do we just stay there, or do we actually move some money from maybe some of those winners into the small caps for a catch-up trade? Asking you guys.
Yeah, what do you think,
my
George?
thesis is intact in terms of like what my theory on like small caps just having such a bad like year. And I think it's like the QQQ's been up almost 30% and IWM only about 6. And
6
to
now.
me, it's just very hard for like growth to be exciting in a small cap when you have just like this insane growth in AI and in like what's quickly becoming like, the best company in America, maybe not the biggest yet, but in terms of how fast they're moving up, I think you'd have to call them that, and them, kind of rolling out their first, like, trying to become a product company. NVIDIA, I'm talking about, I think is very interesting. And I think it's just hard, like this year, especially, like, I'm just like, why would I buy a small cap when I could buy one of these huge companies growing, great profitability, like Meta, dividend even, while it's growing. So it's hard for me to look at that. And you know what? I could easily say that, rest of the year, IWM is going to do better than QQQ. I could say that. I certainly think it's in the realm of possibility. However, there's so much more risk involved in the small caps than these huge, profitable, growing companies. That's where they lose me. It's just much better downside protection, the way these profitable companies are growing and the way the AI excitement has continued. I mean, we were talking about NVIDIA last time, and like for the third consecutive time, they've posted the best quarter I've ever seen. And so I was actually really looking to that to say, are we still on the up curve in AI, or are we flattening out a little bit? And I was just basically going to see where their guidance was. That was the big thing I was looking at. And, they guided up. And I think we're still on the up curve where they're in the best position to forecast this AI demand, and they can't even keep up with it, which is why I'm just like, I don't know why I think you're overthinking it if you don't keep playing the mega caps that are growing like crazy in AI.
It's funny, it's like, man, Dennis, I want to do what you're saying. I want to shift out of these big names and big tech and AI. That's what I really want to, and that's the market I want to see unfold. And I don't think I can, because I'm sort of on board with exactly what George is saying. Like, until you start to see actual weakness in these leaders, man, I don't know how you shift out.
It's crazy. I've been long NVIDIA, for 800 points here now, post split. Now, like, everything in me wants to take the money and run, but then I'm like, well, what am I moving the money into? Like, I'm going to take it out of NVIDIA and I'm going to go into the small caps. Like, to your point, George, I'm like, it just doesn't sound that sexy. It doesn't sound that smart of a move. I mean, so I just keep looking at making a new all-time high here today again, and I'm like, I don't know. I think I maybe just stick it out here until it starts to show me a reason to sell
it. Yeah.
I mean, I see what, like, there's something that I can identify with that I think, both of you are talking about, which is like, as like people that pride ourselves in being good, knowledgeable investors, I want to find that small cap. That's just like, I got it before everyone else. And that's exciting to me. I actually disagree. Like, I don't think this is that exciting. And like, sometimes I'm like, well, like, what are people should buy? And I'm just like, NVIDIA. And they're just like, aren't you some kind of expert? And I'm like, don't say that. And this is not like, this is my recommendation. Sorry. Like, I'm sorry that's not exciting. But there is a piece of me that would like more of an up and coming name to have.
Me too.
For sure.
I've been looking for it too. I haven't found it yet.
It's not competitive. That's like, we have these risk reward things in our heads. And like, I think that's like, because I look at small caps that are exciting, that have exciting tech. Like ENVX is one that I've liked for a while.
I owned a bunch of that for a while, but the price wasn't following, right?
I missed ASTS, which actually, like, I have someone that co-writes my newsletter, and he was feeding it to me, and like, I feel a little dumb, but it just wasn't, the metrics weren't as good on it. And I was like, and he was like, well, they're getting these new contracts, and I see the future of the business, but it's just like, like, they're getting those contracts. What happens if there's a problem with that contract?
All right, like, I like this though. Let's give one thing that you think is maybe a flyer. I just recently bought some RXRX, which is
going off there.
Recursion Pharmaceuticals. It's NVIDIA owns a bunch of them, and they get the chips, before anyone else, and they're doing some really cool stuff in in biotech in terms of modeling and AI services for biotech. So there's my flyer. What do you got? You guys got any good ones?
Oh gosh, you're throwing me right under the
Put
bus here.
you right
'Cause
on the
I'm not a
spot, right?
flyer investor. I'm one of those like flyer day traders. Like I fly enough in my day trading that I try to take the day trading money I make and put it in like NVIDIA and Amazon. I invest so bloody conservatively here that I don't usually invest in the flyers. Yeah, I don't want to bring it full circle to GameStop, but you guys have almost talked me into taking a flyer in GameStop.
Do it. Pressure. Let's go. Come on, long and strong, baby.
Up his sleeve. It's gonna go like 40 or 50. I got the FOMO going on GameStop.
Hearing those words in front of a Benzinga sign cures something from 2021.
Yeah, there you go. Are they still mad? Are they still mad at Benzinga? Are they still mad?
I should no way speak for the whole community. It's all just been fun entertainment to me and fun banter.
I don't even remember what Benzinga did originally. What was the thing that they did that really ticked off all the apes? And
I know way back when they invited me to come on something and talk GameStop. This was like in April 2021 probably, and that turned into we don't do interviews, and then that there were a lot of articles of like forget GameStop basically. That GameStop's over. It's not it's not going to make another run. That really just led to a greater narrative of like don't trust mainstream media. They're all of that kind of stuff. So essentially, that you get paid by Ken Griffin to manipulate the story.
Definitely not. If you listen to Pre-Market Prep, that portion
you'd have a lot more NVIDIA, wouldn't you?
We've never been the biggest fans of Citadel. I'll say that much. That's why we know Dave. And we've had him on our show for years. Right. I don't think
Dennis has been in this fight for a long time.
I don't think Kenny loves us.
No.
Well, that's if we're all waiting for our checks, aren't we?
Yeah, exactly. I was accused today on Twitter of taking. Today I was accused on Twitter of taking sacks of cash, literally.
Yeah.
What for? For what? What were you doing?
For explaining, for explaining how limit up, limit down works. That's what because I explained how limit up, limit down works. I'm taking sacks of cash from someone, and I'm like,
no, Dave, it's a conspiracy, and they're halting just GameStop to slow the momentum down on it. There's definitely nothing in place. These halts that happen on all these other stocks, no, it's just for GameStop, Dave.
Yeah.
But yeah, but anyway,
anything, it would be Bitcoin on a flash drive. Like those sacks of cash, very hard, very hard to carry and easier to trace.
Yeah, come on, get creative, people, right?
But I will. One thing that I actually on Citron that I think is pretty interesting on the Ken Griffin topic, where it's just like I've heard from a reliable source that like retail has become a huge profitable part of their business, and building it was a bit of a lot, anything to do with retail, payment for order flow, just like huge. And so and if you're looking at it as like a hedge fund manager, like things have been very good for Ken Griffin since everybody started hating him. So it's not a bad idea to be like, hey, maybe if they come after my shorts, I'm just like getting them at cheaper prices before they eventually fall. Like maybe I want to piss off retail too.
Yeah. All right.
I mean, Citadel just makes the money on the spread, and these spreads and the movement here. It isn't rocket science, Kenny Griffin isn't, it's just making money on spreads. And when there's this kind of volume and you're selling on the ask and buying on the bid continuously, you're going to make a lot of money. So that's how, that's how Kenny Griffin has done what he's done, is build up his empire by monopolizing the spread. We know this better. You know this better than anybody, Dave. It isn't rocket science over there. Just a lot of handshakes behind retail brokerage platforms.
That's right.
And I'll sell on the offer and buy on the bid all day too.
Yep. And it's eroding market quality, and it's reducing competition, and it's reducing diversity in markets. And that's why we see extreme price moves way more now than we used to, because there's not competition and there's not diversity. But now we're going to get on the soapbox. So let's leave it there.
We'll bring up that conversation for a later podcast.
Yes. This has been a great episode. I really appreciate you guys for joining us. I really appreciate everyone for listening. As always, like, subscribe, leave us some comments, let us know what you're thinking. I think we'll bring this back sooner than we usually do, because next week's going to be fascinating, and we're going to want to do a roundup on that. But as always, thanks guys, and thanks for listening.
Thanks.